Hey, welcome to today's video. Today we'll talk about Adobe and we will cover certain things, a lot of things actually. So I just want to go through this chunk of text. I have some data, pictures that I want to show you, and at the end of this text we'll talk about the bull case, base case, and bear case scenario and the things to look out for in the future. So let's get started. Insider buying, David Ricks, it should be Ricks, and then there we go, much better. David A. Ricks, a board of director, purchased recently 2,250 shares at average price of $443. That's nearly 50% of his whole holdings of Adobe stock. This is a really positive sign, and we can see that some US Congress members are also buying. Now, this information, I'm not 100% confident. I can't really, you can check it, but I purely rely on verified information. We will look into a few other things. This one is not yet here. So let's go. Strong AI integration, Sensei search engine database efficiency, ability to reduce time for creative work. For example, selecting objects, refining edges, matches, fonts, etc. Automated form recognition OCR capability, OCR standing for optical character recognition, allowing to make scanned documents and images into high fidelity editable PDF files, and enables ability to then search for specific text quickly. This is actually really good. The OCR capability is really good because more and more companies move away from paper and they wish to go into a digital era. However, the problem with that is a lot of companies have a lot of papers, and it's really hard for them to then just scan it and upload it and then search for it manually. But now with OCR capabilities from Adobe, they are able to scan it, upload it, and then search for it automatically with the search system, which is really cool. And I think the more people, the more companies discover these things, and the more people learn about these things, the better it's going to be for Adobe, because that's a huge market. That I know a lot of companies that still depend on the paper, and it's not good, because they could improve their efficiency quite a lot with OCR. Firefly, it's good and bad, but we'll talk about it why it could be bad for the company. But I think Adobe is going to execute good on it, so I think it's going to be good for it. Integrated with Photoshop and Illustrator, specifically designed for creative work. Most advanced functions is text to content, and its ability that from that makes ethical and safe content that can then be used for professional use without additional licensing, and that content is fully copyright cleared. On top of that, any outcome images can be future edited and fine-tuned. This is actually pretty good. This is insane. Firefly, most of the companies that create images are not on a quality that Firefly is. Firefly is on a very high quality of creating images. Not only that, but they're licensing free, so they can be used for professional use. When you make certain images, you need to qualify them for the license, and able to be to then use them for professional use, so for marketing purposes, etc. This guarantees a full copyright cleared image, and on top of that, as you make them, you can fine-tune them. So most of the softwares, when you make an image, that's it, you can make an image. When you give it another prompt, it just makes a brand new image. It has nothing to do with the first one. Firefly has ability to make an image, and then you can tell him, I don't know, I love this image, however the sky is a little bit too dark, I would like it to be more bluish with sun shades coming through the right side, and the Firefly can recognize this and edit the old image that already made and then implement it, which is pretty cool. Competitive advantages, there is no competitor that covers all aspects and offers all in one package like Adobe. So Canva covers certain things of Adobe's offering. I don't know, Microsoft covers certain things, Google covers certain things, Salesforce covers certain things, Adobe covers everything. It's like all in one package. And it's much easier to get a company purchase a whole in one package, because it's just like, okay, I'll pay for this, I have this much expenses, and it covers everything I need. More than, okay, I need to go for this company to do this, I need to go to this company to do this. Here you have one sale of one purchase, you have one support system, and it just makes things easier when you're operating on a larger scale. Even smaller, medium scale makes it a lot easier, and I think Adobe is the king here, and that's why I have a very positive outlook for this company. Creative professional worldwide use Adobe as industry standard, so we'll cover this chunk of text now. Adobe Photoshop, Illustrator, and Premiere Pro and InDesign are tools that are integrated in many schools and universities, as Adobe supports educational institutions with special pricing and licensing, making it more accessible for students and teachers. Additionally, they offer resources like tutorials and curriculums guided to help integrate those tools into educational program efficiently. This support helps prepare students for professional roles and tools that students then stick with using it in a later stage. So many of you will know that, okay, you went to school, you're learning certain software, you know this software, you are comfortable with this software, and then you go and work for a company that uses this software. You kind of just stick with it because this is something you're comfortable with. This is something you are like, you understand, you know how to fix certain things, you know how to adjust certain things without trying to Google or trying to use GPT models to answer your questions. You just know it. And once people stick with it, they stick with it. It's because we are humans. We like consistency. We like repetitive things. It's just the way humans are designed. You stick with it because you love it, you know it, and it's easier that way. A switching cost at large scale is very costly. Advanced training is required, and all previous work might not be able to be transferred due to formatting issues. This is huge. So imagine you have a large corporation and they're sticking with Adobe for like 10 years, and then someone comes in and is like, I have a cheaper option. Yes, but that cheaper option will cost us more on a shorter span. So example, if you look at it, okay, I'm coming to you, you have 100 employees, and I have this amazing software which is a little bit better than Adobe, and the price is cheaper. All right, that sounds pretty good, but the training that you need to train all of your 100 employees on will take hours and hours and hours. So that means it's coming out of your budget. Then all the previous work that you have completed when you're formatting it from Adobe to another software is not going to be 100% compatible. So even like minimal mistake could cause large impact on a larger scale. So it's just easier to stick with Adobe. And that's why I love this company so much, because they have all-in-one package. They have a lot of retentions, which we'll talk about later, and it's just a headache to switch, and it's just industry standard, and I'll not go against it. Digital media and digital experience are there we go. Now we got to the point. It's 75% of the company profits come from digital media, and digital experience comes at 25% profit. Reaccruing revenue from subscriptions, and the best thing, it's sitting at 80% renewal rate. Like, if you know anything about renewal rate, 80% renewal rate is, it's crazy, and I love it. Net profit margin has normalized about 26 to 28% in the past 3 years. Why we're looking at the past 3 years? We are excluding the 2020 boom, because 2020 a lot of companies switched to the system we talked about above, OCR, the optical character recognition, and the sign document. I think Adobe sign document performed extremely well during 2020 pandemic because everybody was working at home or in the office, was shut down, and they had to do it digitally. And the 2020 boom for Adobe was it was crazy. Looking over diluted shares count, 2019 was reduced from around 486 million, while in 2024 reported shows 449, showing extensive buyback program at around 300 billion. So 300 billion in the last 5 years. We'll break down that more below, and why the 10 billion of that 30 billion was due to the failed acquisition, which is, it's quite interesting. When it comes to margins, they're at the best in class. Operating margin sits about 36%, which is really good. I'm pretty sure I have, yeah, this is the dilution that we talked about, the revenue base, and then there we go. Now we are at operating margins. Operating margins are at 36%, which is extremely good. Adobe's pure software focus allows gross margin to be extremely high, and they're currently sitting at about 89%. So right here, gross margin. Taking into consideration that Microsoft is at around 70% and Salesforce is about 79%, this is exceptional. Now, Microsoft 70% is like, Microsoft is not purely software company, it's mixed of hardware and software, and that could be the reason. But Adobe's 89% is just, it's like, it's much smaller company than Microsoft. It's still extremely large, but it's quite interesting fact to know. Management focus is maintaining healthy margins. Looking over their non-GAAP operating margin target is 46. That's equal to 36 GAAP margin after adjusting the stock compensation and other exclusions. We will talk more about this below, and what to look out for, and how to calculate this into earning per share, and to see how that could reflect the price in the future. When looking over buyback program with double digits revenue growth, it is resulted in a 5-year earning per share compound annual growth rate of well above 15%. This is really good numbers, really strong. And looking over at goodwills, it's high, but the company integrates its acquisition well. Marketo, Magento, Frame.io, etc. Except one, which we'll talk about later. But yeah, let's see here. There we go. Goodwill is at 12,700 of total assets of 30,000. This, in general, like, I would love to see goodwill at under half of the total asset, which it currently is, but it's still extremely high. But important thing is in goodwill is not only to see the numbers, but also understand the reasoning behind the numbers and if those numbers are good or bad. And trust me, in Adobe's case, it's good. When going over cash reserve, we can see a very healthy $7.89 billion, and that indicates healthy liquidity. Combine that with non-existent inventory due to the software business, and you have a powerhouse able to stand strong no matter what the market throws at it. With Adobe, I'm not really scared about recession, even if it comes. We don't know if it's going to come, when it's going to come. So buy the companies you're comfortable with holding in a recession and holding in downturns, and Adobe is one of the companies that I'm comfortable holding in the recession and downturns. Other thing to consider here is their tangible book value, as it's small, excluding goodwill. And intangibles, tangibles equity was only about 0.535 billion in 2024, but this is normal for the software companies. Plus, given the above mentioned strong position in cash and market leadership, it should not be a big concern. A lot tangible comes from acquisitions and stocks, buyback programs, which we talk about, and we'll talk about it more down. And there has been a lot of both with Adobe. Yeah. So, cash acquisition 7.61 billion. Work tangible books we can see it at 535 recently. All right, looking over the loan structure, so long-term debt, leases, etc. 4.13 billion long-term debt, notes and bonds. 1.5 billion in current portion, and 0.43 billion in lease liabilities. When we compare this all against just the cash, 7.89 billion, that makes Adobe still cash positive at 1.83 billion, which is just, it's insane to cover all of your debt just with cash. Debt to equity ratio is modest. Total liabilities are about 16.12. This should be 12. 16.12 billion, not 16 or 12. Billion versus shareholder equity of 14.11 billion in 2024, down from 16.5 billion in 2023. This was due to the large buyback program in 2024, over 10 billion due to the failed acquisition in later text, the one I mentioned a couple of times now. Despite the low buyback equity, Adobe solvency is strong. Debt to EBITDA is well below 1x on its net basis, and interest coverage is extremely high. EBITDA to interest is 50x. We'll touch bases more about this. It's crazy, like the amount of loan that Adobe can take and still not be worried about anything. It's crazy. In fiscal year of 2023, Adobe paid 106 million. It disconnected me. Okay. In interest, while operating income was 6.65 billion, and interest coverage ratio of 63 times over. Looking over balance sheet, we can see that the high quality financial situation and position. So if we go, there we go. Asset liability structure is stable. About 53% of assets are financed by liabilities, but the thing is, a large chunk of liabilities are net debt. Thing to take into consideration is also a low book equity relative to market value. Example, Adobe's market capitalization is around 195 billion. For above, it's 14 billion book equity, reflecting the strength of its intangible assets and future earning power. Future earning power is so important because that is the price movement that we'll see here as well. That we'll talk about the bull case, like let's say later, I can see this at 40 billion, 35, 40 billion easily. EBITDA equity ratio, there we go. Adobe operating cash flow, we'll talk about it later. Investors seem to value Adobe for its cash flow generation rather than its book asset. This could be good and could be bad. The good could be that higher margin cap relative to book value shows that investors are optimistic, and it's often a reflection in strong investor confidence in company's management and strategic direction. It could be bad because if the company underperforms, it could pose a risk for price correction. So the goodwill is good. That's why I said the goodwill, it could be good and bad. It's good if the acquisitions perform exceptional. It's really bad if the acquisitions don't perform exceptional. At the moment, Adobe's acquisitions perform exceptional for a couple of years now, so I don't think this is something we should be worried about. Low equity base combined with high margins allow for a high return on equity, currently at 30 to 40% range, which is really, really healthy. Return on asset is also strong, 18 to 19%. This indicates efficient use of assets and shareholder funds, as we talked about before, above as well. Cash flow is robust. Cash flow is robust thanks to Adobe's high margins and upfront subscription-based payment. Over the last 5 years, operating cash flow grew from 5.73 billion in 2020 to 8.06 billion in 2024. Cash flow from operations generally exceeds net income significantly due to substantial non-cash expenses and the influx of cash from growing different revenues. So that's the reason why this is happening. So let's look at the CapEx. CapEx is a capital expenditures. So CapEx are modest for a company of its size. Annual CapEx has ranged from about 0.35 to 0.45 billion in 2019 to 2013, and actually dropped to 0.183 in 2024. CapEx is typically spent on data center equipment to support like cloud services and facilities, IT infrastructure for its offices, etc. Even at its peak, CapEx was only at 2 to 3% of the revenue, reflecting a capital-light business model. Consequently, free cash flow is very high. Looking at fiscal year of 2024, FCF standing for free cash flow, was about 7.87 billion, which is 36.6% of the revenue. Over 2020 to 2024, free cash flow was around 34.4 billion, allowing Adobe strategic flexibility when it comes to acquisitions, buybacks, and other investments, like we talked about above, share buyback programs and the acquisitions of 3 companies that I mentioned, and the 4th one that failed, which we'll talk about now. Talking about acquisitions and so on, we need to look at what happened with Figma. Here, acquisition failed due to the regulatory challenges, as both European Commission and the UK Competition and Markets Authority expressed concerns. Buying out deal was 20 billion, 10 billion in cash, and 10 billion in stock. That's the 10 billion we talked about earlier, the acquisition, and we talk about it here as well, the buyback program. That's why the above mentioned 10 billion buyback program. After issues, Adobe and Figma both agreed to mutual termination of their merger. This resulted in Adobe paying 1 billion termination fee. I think monopoly, yeah, there we go, I mentioned it. Indicating a pushback against potential monopoly play here. So it was a valid reason for this concern, but I think Adobe could benefit greatly from it as well if they do it properly. Even if this was bad for, it's good for Adobe as well. Large buyback programs plus no hard damage here. So when they recover and they can maybe focus more in in-house development, question mark. This is like just a suggestion. Adobe has exceptional team. They have exceptional engineers. They have exceptional programmers. They have very creative developers. And I think in-house development with 10 billion investment into it could do so much good for Adobe. I have a note for myself to like and subscribe. If you could, I would greatly appreciate it. It takes a lot of time and effort to put this together. I need to study a lot about the company, the financials. I need to calculate a lot of things. Just to show the notes, like even the notes, I write everything manually, and I try to deliver this in a natural way so you guys can understand it and see potential in investing and taking profit from it as well. So if you like and subscribe, I would appreciate it. Thank you. When we talk about buyback, especially the 10 billion one, the one I mentioned a couple of times now in the last 5 years, let's break it down. 2020 buyback is 3.78 billion, 2021 4.6, 2022 7.07, 2023 4.99, and 10 billion in 2024. The crazy part here is that despite all of these buybacks, Adobe still managed to be a cash positive for most of the years, which is crazy. Let's look into the leverage positions. Debt to equity ratio was about 0.43 in fiscal year of 2024, and its debt to asset ratio was 0.20. It's very healthy. The long-term debt of EBITDA ratio is about 0.6x, and the net debt basis, it is negative. Net debt to EBITDA is effectively zero, Equity multiplier is about 2.14 in 2024, which is a moderate to mainly reflect non-debt liabilities. Time interest earned is so high that Adobe could double or triple its debt load, the one I talked about earlier, and still easily cover interest, indicating significant debt capacity if ever needed. Looking at efficiency, receivable turnover, Adobe's accounts receivable of 2.07 billion versus revenue of 21.5 billion implies receivable turnover of nearly times 10 per year. Yeah, this suggests effective credit management. Asset turnover has improved as the company scaled. This is really important to look at because that indicates they know what they're doing, they know how to scale, but at the same time asset turnover to be improved. So it gives me a positive sign for Adobe in next 3 to 5 years easily. Around 0.53x in 2000, and I think this should be 20, and 0.71x in 2024. This reflects that Adobe is generating more revenue per dollar of assets, a positive trend indicating better utilization of its asset base. Working capital turnover is extremely high because Adobe's working capital is small. In 2024, revenue of 21.5 billion on working capital, 0.71 billion gives a 30x turnover. I've just noticed that I didn't swap any of these. Yeah, I wanted to show you revenue, Adobe working capital, which we are hitting now. It's pretty good. This is my first video, so like it's the second video, but first video that I go into so much details. So please bear with me. I'm trying to catch up with these things. I'm trying to do this. I'll do this better as the time progresses, and if you guys allow me to, because if you like and subscribe, I will do more of these videos for sure. This is the metric I love to look into. Employee productivity is another interesting measure. Adobe had 30,700 employees in 2024, yielding about 0.70 million revenue per employee and 0.80 million in the net income per employee. It's a good number. And now let's look at the older number and how it compares. The number has improved over time. Employee count in 2018 was 21,000 and revenue per employee was 0.43 million. So productivity is up significantly. Operational performance and efficiency. Key driver is the steady rise in digital media. Analyze reoccurring revenue, ARR. Analyze reoccurring revenue. My English is going to struggle. Reoccurring is here, so we're going to say ARR going forward. Looking at Adobe's digital media, ARR, nice, grew by 2 billion in fiscal year of 2024. And its total of 17.22 billion, indicating a strong net new subscription and renewals. We'll talk basis why it could be over 100% plus, and the 80% retention rate later on. Another revenue driver is pricing power. Adobe has periodically implemented pricing increase for Creative Cloud. Just to be clear, when adding significant value or new apps, they didn't just increase subscription base because nothing. They have a reason for increase of the price. Customers have generally accepted these increases due to the lack of comparable alternatives. Additional Adobe moved into mobile apps and web-based offerings like Photoshop on iPad, web versions of Express and Acrobat. It helps drive usage and eventually conversions to paid users. Adobe actually started recently pushing also a free model, like free 7-day plan and some certain elements for free that users could check it out, test it, they can see the quality of it, and they can see how exceptional Adobe is built, and then it will convert them to paid users. And it's a good reason why they convert, because the software is extremely good. The research and development visible. Oh, wait, let's try to match. Creative Cloud, dividends. I actually don't have the research and development for some reason. I think I have to go back. Nah, never mind. Ooh, Adobe revenue, working capital. It was here all along. It was just the next slide. I swear I'll get it. I'll get it eventually. You can see the research and development growth. So let's go back into my text. The research and development, continuous product updates. Adobe issue frequently feature improvements via Creative Cloud. This is really, really good, because before it was like taking an entire year to update. Now it's like just a Creative Cloud, bam, update. And entirely new products like Adobe Express for a quick design, Adobe Aero for AR experience, and integrated AI like Sensei and a new Firefly into the workflow. The innovation not only keeps customer engaged, driving retention, which is really high already, but often justify upsell to higher tier plans. So the higher tier plans, you have more functions. More functions, well, you get where I go. Adobe's remaining performance obligations, RPO. Remaining performance obligations, we'll call it RPO. It's a hefty one. Was 90.96 billion, up from previous year, which indicates a strong pipeline of future revenue. RPO is roughly equivalent to a 1 year of revenue, suggesting a multi-year customer commitments. Like I said, large corporations, even small and medium, it's a headache to transfer everything. So they are not committing to a year; they're committing to many years. And stable growth is a good growth. Another metric we can look into is subscription renewal rates. They are not publicly disclosed, but looking at some data, believed to be a very high. The net retention rate in Experience Cloud is likely above 100%, and customers expand usage. How I calculate this to 100%, like this is just a personal opinion. I don't know if that's it. It's not a public available data, but 80% retention rate, and then the 20% that customer base that they lose in that month, they gain more than 20%. So it's like over 100% calculation, which is pretty good. Adobe's customer satisfaction and brand loyalty is strong, though periodically forces uses a backlash in pricing and feature changes. So we'll go through some examples why this happens, and I'll explain them a bit. Some discontent around subscription model initially, or more recently concerns over generative AI tools potentially changing creative workflows. So generative AI workflows, it's like a double-edged sword. I'll talk about this more below, but just for you guys to be ready, it's like it could damage their business, but it could be positive on their business. But if they don't do it, other companies will do it, and they could lose the business. So it's like a tricky situation. But I'll talk about it more when we go through certain things. And this is very important. Adobe monitors metrics like daily active users of apps, subscription renewal rates, and engagements with cloud services to ensure it retains users. Adobe it's insane when it comes to efficiency of data tracking, and the way they track data. They if in 24 hours they lose more customers than they gained because of the recent changes, they could adapt very quickly, and this is really good, and I'd love to see this in a company. We go through SWOT analysis. SWOT stands for strengths, weaknesses, opportunities, and threats. Opportunities more like me blabbering about things, but let's get through it. Strengths, brand power we talk about, customer loyalty we talk about, one-stop, unmatched ecosystem we talked about. Over 90% revenue is reoccurring, talk about. 89% gross margin, talked about. 30 to 40% free cash flow, you know it. Innovating, backed by research and development investment. We are still on this screen. I don't know if there is even more. Revenue segments, Creative Cloud, growth, good. Where did I stop? Research and development. A switching tool would be incredibly hard and cause compatibility issues. Everything we talked about, the strength in Adobe is playing there. Weaknesses is high pricing. AI generative is double-edged sword, as it could reduce subscription members. Weaker CRM compared to Salesforce. So weaker CRM to compare to Salesforce, it's common sense here. AI generative is a double-edged sword. So we'll talk about this a little bit more, why it could be a double-edged sword. Let's say you have a large-scale business. You have about 100 creative. You're a marketing agency that has to create images for your customers or for your platform. Generative AI Firefly could, just with the text, create insane image, and that could be re-edited multiple times. So the double-edged sword here is that Adobe is on subscription base, but if the company itself, let's say, says, okay, we have 100 employees that are doing this creative workflow, with the Firefly, we could actually fire 50% of them out. And other 50, because they can use Firefly and they could adjust it very easily, it doesn't take so much time to create a quality good image, they can do this type of work, and we fire other 50, and therefore the 50 subscription we are paying to Adobe for these 50 people, we just not going to need it. So we save on salaries and we save on subscription. That could potentially hurt Adobe. But at the same time, many more companies will adopt into Adobe because of this, and it's really important for Adobe to like balance it out, because if like many people say, why they just don't stop it. They can't. If they stop it, someone else will do it. Someone else will do it better than them. And then the companies, the structure we talked about before, where they can save some money, but the compatibility issues are there. There's no compatibility issues with imaging. There's no compatibility issues with marketing images and so on. So they could get hurt a lot. So Adobe has to do this. It has no choice. If they don't do it, someone else will do it, and adoption of this will go so quick. And it's a tricky situation. This is the trickiest thing in Adobe. I think solely I go with them because I trust their management team. So far, everything I've looked through, they've done exceptionally well. Their data tracking system is extremely good, and I just believe in them. I think it's a good hold for a long period of time, and this is a weakness, and this is definitely something they should be worried about, and I think they are, and I think they will approach it. If someone is going to approach it extremely cautious and well, it's going to be Adobe. Let's go through opportunities. So we went dark, but let's go positive. Emerging markets, as more companies move away from a paper structure, the one I talked about above. New product category is there, as well as 3D content creation, collaboration platforms using Frame.io that they acquired, product design, and PLM software. The creator economy boom means things like video editing for YouTubers, UX design for apps, etc. are growth areas where Adobe can introduce tailored solutions. Cloud services, cloud ecosystem, future monetization by offering more cloud services, for example, host websites. They have Adobe portfolio, but could expand in this. They could provide analytics for creatives to see how content performs, or a marketplace for freelance services integrated within the Creative Cloud. Just like the Adobe, if you're gonna look at this, so I don't know, just throwing it out there. Enterprise expansion, targeting industries where it penetrates. So this is like financial services, health marketing with special needs. Adobe's real-time CDP, CDP stands for Customer Data Platform, is an opportunity to lead in this space, capitalizing on its analytic legacy. What we talked about before, Adobe is insane with analytics. The threats. Competition and alternative business models could and already are taking percentage of customers. It's just the way it is. Everybody's losing percentage of customers one way or another. Recession could impact Adobe's revenue more than other companies in other fields. Adobe is not a recession-proof type of business, because we'll talk about this more below. I think I mentioned it in point 6 or 7 on 6. So we'll touch bases on why they're not so resilient and why they depend on small and medium businesses. Cybersecurity, a cloud operations with millions of creative assets and corporate marketing data is on its servers, so it could be a target of a cyber attack. This is migrated by a strong investment in cloud security and practices. Adobe has annual Security Summit compliance certifications like SOC 2, which is Service Organization Control 2, which is really, really good. So I think they didn't have any serious issues since 2013, I would say. I think, don't hold me if you want to look into it more. I think 2013 was the last year they had any issues, and they're aware of what they've got and what they could lose, and I think they are not taking any risks when it comes to the cybersecurity threats. Forecasting and valuation. So we'll just do some assumptions. Forecasting and bull case and bear case and what could happen if it happens. Total revenue is estimated for fiscal year of 2025 total revenue of 23.3 to 23.5 billion. That's 8 to 10% growth rate year over year. Even with a conservative scenario, revenue growth for 8% CAGR means compound annual growth rate. So I'll just keep calling CAGR. Over 2025 to 2030, which would put Adobe about 35 to 40 billion revenue. The one I mentioned earlier, I think this could go 35 to 40 billion. On earnings side, Adobe's margins expected to remain robust. Company is targeting 46% of non-GAAP operating margin in fiscal year of 2025. Anticipated EBIT margin is trending back to mid-30s in the coming years. And Adobe's GAAP EPS guidance, EPS earning per share guidance for 2025 is $15.80 to $16.10. Which is a midpoint. Midpoint is about 28% growth over fiscal year of 2024. GAAP EPS was 12.36. Part of this jump is due to the lower anticipated one-time charge and continued buyback program. They assume 433 million diluted shares versus 441 million diluted shares in fiscal year of 2024. So the buyback program is going to continue. And now we'll talk about some speculations here. We'll talk about bull case, bear case, and base case, things to look out for. And we are going to wrap this video out. So my bull case prediction is growth of 12% for several years, and it maintaining operating margins at mid to high 30s. Additionally, if interest rates decline, I hope it will, the market's required return might drop. In this case, Adobe's earning per share could compound a 50%, and a high terminal growth, let's say 4%, could be justified. A DCF of growth relative valuation might put stock into 600 plus per share, and if AI Wave is caught correctly, and I think they will because they're early adopters, could even see a $720 no, $720 per share, Dutch share, per share. That makes more sense. Per share, it's a 60% return from the current price structure. I think 60 or 64%, I would say. Let's go for optimistic 720. 64%. Let's take pips. 63, 64%, which would be really, really good. Bear case, Adobe's growth slows to mid single digits or compresses margins. We could see stock price in the low $300 per share. I don't think this will happen, but I'll show you and I'll tell you how to track this after this video as well for yourself. Every quarter is something that it's good to revisit the numbers. As the numbers come out, look at the numbers and just compare and see you can kind of see if it's growing up or going down, and then if it's going down, why it's going down, if it's going up, why it's going up, and evaluate your position accordingly. Adobe is a long-term hold for me. I'm slowly buying it in now because I think it's undervalued. Or fairly valued in some aspects, and I'll keep growing it as it goes in the low 300s. I'll keep buying. It's not a problem. Base case, growth of 9 to 10% per year, and then a few years, and then slows down to 6 to 7%. It's steady margins at 35. We could see stocks at $480 to 500 range. So let's be more optimistic at 500. Let's be more optimistic at 500. That's about 13% growth. For a company like Adobe, I don't think I'm more optimistic than that, but of course it's a base calculation. We need to do it. Things to look for. So we covered everything. You understand the business models, you understand the numbers, you understand what's going on, you understand my aspects of it and how I look into it into the future. So if I stop the video here, that's it. But I want you to take this video to look at it, to understand it. At the same time, do another data research on your own, just the things that you need to look out for, and if the things change. Watch for Adobe quarterly revenue growth, particularly in digital media, ARR. ARR, we mentioned it above, know what it means. And the net new ARR figures. A significant slowdown, for example, ARR growth dropping to low single digits, this could be warning some, might indicate a saturation of competitor impact. So the ARR relates to the year accumulating, my English. So the year numbers of profit compared with the large numbers of subscriptions that could potentially impact. So the numbers were about 19.6 billion. The one we talked about was related to year in advance or multiple year contracts. Thus far, guidance for 11% growth in fiscal year 2025 looks healthy. So double digits, 11%. It's on the edge, but if it goes under single digits, just look out for it. Profit margins. If Adobe can expand margins as guided, non-GAAP operating margins at 46% in fiscal year, it would be good. So if they adjust this would be good. Innovation and product updates. Progress with AI, new product launches, user feedbacks, and market reception of Adobe's tools is something to look out for. Definitely the sentiment is there. It's been used by a lot of creative people, a lot of professional people. Certain changes could go positive, could go negative. This is something to look out for. Competitive moves from Canva, Microsoft, Google, etc. if they are pushing any creative AI features. So if they're like really hard focus on creative AI features, this could trigger maybe some buyback setbacks for Adobe. However, we talk about the infrastructure that Adobe has. I don't think it creates a big potential threat, but something that we should definitely look up for. Enterprise deal momentum. If Experience Cloud, watch for a large deal signature signings and RPO growth. If RPO backlog starts flattening, that could indicate weaker bookings. Also, Salesforce and other earnings can provide read-through on digital marketing and spend environment. 6. Micro indicators. Market spend trends, SMB health. Adobe has a lot. Adobe. This has been a long video, but we are near the end. You can do this, Dennis. Adobe has a lot of SMB customers. SMB is small to medium businesses, and global economy conditions will all feed into Adobe's results. The one I mentioned above earlier. Small to medium businesses tend to get hit much more than large-scale businesses in recession. So if recession is to happen, small and medium businesses get hit a lot, and one of their expenses is definitely Adobe software that they could potentially cut back. So if they cut back on the workforce, they will cut down on the software requirements, and therefore Adobe is going to get hit the most. So again, I don't know when the recession is going to happen, if it's going to happen. How will I prepare for it? I just look at the company, I know that it's healthy, financials don't give me any red alerts, and that's it. If it falls down, the recession comes, small and medium businesses shut down, I know Adobe is still going to be here, just at a cheaper price, and I'll just buy more. Capital allocations. Oh, wait, let me transfer my... There we go. Capital allocation, see how Adobe uses cash. Will it allocate buybacks further? I think it will. Initiate a dividend? I don't think it will. There is no dividend right now. The Adobe is a high growth company. I think the reinvestment in buyback programs of shares and reinvestment in due to the failure of acquisitions of Figma, I think investment into certain elements that I talked about, opportunities above, could benefit it much more than creating a dividend stock at the moment. Later down the line, maybe yes, but right now I don't see it. Again, it's just my assumption. Even if they do it, and if they do it at like small annual dividend fee, like at $0.88 per share or something, it will be healthy start. So, but I don't think they will. But again, I don't know. Or pursue another acquisition. That's also a possibility. Like and subscribe. Again, I am just a reminder for myself. It takes a lot of time and effort to put this in, a couple of days. And I just appreciate your support. It would help me a lot to grow this community, to grow this channel, and to grow this wherever I'm publishing it. I'm thinking about publishing it on X, YouTube, as well as looking at maybe some LinkedIn. We have Discord group as well. I would like to touch bases about my Discord group, if that's okay. If not, you can just skip this part. You can just pause the video. We'll not talk about Adobe anymore. I'll just touch bases for my Discord group and what you get inside my Discord group. There's a lot of things for free. So I'll just go over it if that's okay with you guys. So here I talk about my trading journey, my trading strategies. We have updates where I talk to all of my Discord members about certain things happening in the market. I have results. Recently I changed a lot of my the way I look at the data and the way I look at the market. Before I used to take like 7, 14%, 8%, 0.04 break even, 7%, 1%, 6% profits, and you can see that resulted in like 89 positions and $11,500 profit. Recently I changed my trading ways, and now I have like total positions of 37 with a total profit of 29,000. And now recently I changed it even harder for even longer term holding. So I think it's gonna be like maybe total positions of per quarter 10 for like, I hope more than 30,000, but it's interesting. This is all for free. This, like, you can see all of these things free. News as well. If nothing else, come for news. We publish daily. The latest news and events, sector buzz, stock movers, trends and sentiment, what is hot, what is not, politics and crypto and so on. And we publish this daily, so at least you can get like a nice summary of the information that I publish here. We have weekly portfolio updates. So this is my public traded portfolio. I have like public, I have private as well, which I have crypto holdings and so on, which I don't disclose here. I would like to have more stable community here. Selling alerts, I publish all of my sales. They are date stamps, time stamps, position stamps, percentage bought, percentage sold. You can see exactly when I bought, when I sold. Spotify was a really nice position of 600%, Nvidia 160%. I think Palantir I sold at a nice 1,500%. But you can see all of this is, I'm very open with my community, and I publish this every single time I close the position. And I publish this a lot. You can see like so many positions. I don't fake all of my data. You can look at the data yourself. You can check the markets. You can see if I'm lying or not. But yeah, some of them, like if I go further, you can see I stopped at 11:10, but that's because I was structuring differently my Discord before, and I was having positions sold somewhere here as well. I'll find it. I'm not lying. It's here. I just need to find it. Let's go up. Ah, there we go. So I had it in Croatian language, my native language before, and I changed to English because in Balkans there is not much interest for stocks, I think. But yeah, before I was publishing it here, so even here you can see all of my close positions, percentage, dates, times, and everything. Yeah, for my premium members, I have buying alerts, and I do free alerts as well. I think Adobe is part of the free alert as well. Yep, Adobe is part of the free alert, and actually this video is going to be fully unedited and fully published for everyone, even the public, for public as well, so they can see why they should buy this stock. And I'll like once a month, I think I'll do one stock for free, like one of these videos for free. So being in Discord channel, you can get a free stocks as well. Stock analysis is something we used to do like this. I didn't like it. It's like, it's very basic overview with like some charts. People like charts. It was like a basic overview. Writing all of this down and publishing it, I don't think like 80-90% people will not read all of this, and that's why I decided to do video format. I think it's easier to follow along, and I like it much more. And I don't like it that much, but I'm getting used to it because I'm very nervous. It's a new experience for me, but I enjoy it. I actually have fun recording. Try to be myself and show my personality, but also to go closer to community, to see me for who I am. Beginner series, I will ask my admin to open this for free for everybody. This is just like a basic segment, things that you can find on YouTube, how to get started in trading, brokers, looking at data, reading balance sheets, and so on. Stock research, and this is something we're still building on. We have trade ideas where people can ask questions about their trading ideas, certain things they're looking at, certain things they're thinking about, and I reply to them with my own personal opinions. We have review sections where people leave reviews. If they're positive, negative, they can publish it here. We have general chat as well, where people can ask kinds of questions. I think just today, what are you doing with Nvidia? I sold it a few days ago and took a good profit of it. Oh really, I bought it at 130, should I wait or break even? I'll reply to him after I'm done with the video. But yeah, you can ask questions, I try to answer. As we grow the Discord community, I think it's going to be harder and harder for me to answer these things, but I'll do my best to reply, or at least give you a detailed video like this to help you guys out. I do weekly portfolio updates as well. I don't hide my portfolio, it's fine. Sometimes it goes up, sometimes it goes down. It is what it is. I just zoom out, and I know in the big scale, I mean, I'll be always positive because I look at the good companies, I look at the good balance sheets, I buy good companies, strong companies, and I hold them for a long time. That's all it is. That's the beauty of it. That's it. I hope you enjoyed this video. It's been a blast making it, actually. I actually had more fun than I thought I will. I hope to see you join my Discord. I'll leave the link in the description below. That's how you do it in media. I don't know. But that's it. I hope you have a wonderful day. I hope you join us, and take care.